Hello, everyone, and welcome back to the Man and Machine episode 147 here with Mark Phillips from Harvested Financial and my co-founder of PeakBot, Ben. Gentlemen, how are we doing this morning?
Doing good. Coming off a nice hot weekend. Got a little tan going on. Had some time at the beach. It was pretty nice.
That's excellent. Excellent. Mark, can you top that?
Summer right now. This is right before the cicadas come out and back to school specials start. This right now. These weeks of July are peak summer.
Dude, don't hit me with the cicadas thing. I'm not like a terrified of bugs guy or anything like that, but how about these lantern flies up here in the Northeast? Did you guys get those last year? Those crazy black and red ones?
Are they still around?
I saw one yesterday and it ruined my whole day. They don't care. They're not bothered by you. They will just be in your space. Mark, have you experienced these things?
I've not experienced them up in Connecticut, but I was down in Brooklyn and saw them. So, but I know they're around. I see, my local Facebook group is lighting up about them.
Are you warning us about something? Isn't cicadas every 17 years or something? Or are they due?
It's a certain type of cicada.
Oh, okay.
There's a certain type of cicada that's once every 17 years. And I think it happened like 13 years ago. So I think we're coming up on it.
Oh, no, dude. I want out. Anyway.
The signal of like the end of summer. Like you start to hear those coming in the evenings and it's like, ooh, these days are getting shorter.
Yeah. Are you guys getting annihilated? I get annihilated by bug bites. Normally, not too bad. This year, getting hammered with bug bites. Anything for you guys?
Bugs avoid me for the most part.
I gotcha.
I don't know what it is. I don't know if it's my blood type. Maybe I smell.
I'm scratching one on my ankle right now. Mark, no bugs coming after you this year?
Oh, I'm a bug magnet.
I was gonna say, dude, something about that fair skin. I don't want to come at you live on air, but I was looking at you saying bugs love you.
Oh yeah, the sun bakes me and the bugs love me. It's summer's just a real pleasant time.
Hey, that's why you're constantly grilling, smoking, right? Keep the bugs away. Give them a little, get them out of there. All right, so let's get into it. We were not here last week, so it's been a little while. Happy to be reunited here. Lots been going on in the market, if you will. So we can cover a lot of that today. Of course, we will have our stock in real life. We'll see if we can maybe form a trade idea around the stock of real life. We'll talk about, we'll get educated with Mark and Ben on King Condor, our last session, specifically covering our trailing stops, okay, and how that defense is built into the bot. If at any point one of the legs are profitable, it'll enter the trailing stop, and Mark will tell us more about that in a little bit. So that and more on today's show. Doug, missed you. Good to see you. How are you? I'm sure you'll be tuning in along with us throughout the show. All right, let's get into it, guys. Do we want to start with anything high level, or do we want to just kind of like dive in stock in real life?
Let's get into the stocks in real life right here.
All right, let's do it.
So we've got AT&T today. I always thought the slogan was raising the bar, right? That was AT&T, right? Where they had those commercials where there was multiple things lined up to look like cellular signals or service.
I don't know, to be honest with you, and it could be one of those things. What's it called? The effects where like you swore something was that way.
Oh yeah, what is that? What is that name?
Mark, you know the name for that. When you swear something's one way, like the Fruit of the Loom logo, people swore there was always like the gourd in there.
Sinbad was in the movie Shazam.
Yeah. What is that called? When this is gonna kill us. We could Google it, but I think we're trying not to at this point. Anyway, Ben, you might be right. They definitely have had some great commercials about it. Doug, I think this is you're wrong, Ben. If Doug hasn't heard about it.
No, it's Google that. I'm going to Google the name of the thing when something you could swear it's something effect.
Okay, gotcha. We'll take a look at it. I want to say like this is going to sound ridiculous, and I think this is a sandwich, and maybe I'm just hungry, but I want to say like the Monte Cristo effect or
Mandela
oh
effect.
My God, Daniel, thank you so much. Not a good start for conversation this morning. We're going to bring it back together. All right, let's talk AT&T.
Mandela effect. AT&T.
Let's talk about the ticker. Just T. Love it or hate it for AT&T.
Knowing why it's T, I love it. But not if you don't know why it's T, you're like, what a missed opportunity. They could have done ATT as their ticker.
I don't traditionally know it, but I think you might have teased it. Mark, do you know what T stands for AT&T ticker?
I don't actually. I do
guess?
like single letter tickers though. I think there's a lot to be said for that.
It's a power move. It shows some dominance, right? Like,
oh yeah,
I've been here. This is my number. This is my letter. But I don't associate it with AT&T. Does it stand for telephone?
yes, it stands for telephone.
Pretty good, but not everybody's going to assume that.
Well,
Mark,
it made a lot of sense when they first hit the markets, right?
They were first on the telephone game.
They were phones. I mean, they still are phones, but we know them as phone service now.
Correct. All right, let's talk about this stock. I'm curious to know, Mark, your carrier, where you're at up in Connecticut, what's the primary? Is it still Verizon?
Yeah, we're baby bells up here. We got Verizon.
Okay, gotcha. I think I've always been Verizon. Ben, I think you're the same. I could be wrong.
Yep.
Okay.
Yep. In fact, if you did not have Verizon in this area growing up, if you didn't have Verizon, you were excommunicated. You were just.
Well, yeah, I'm not gonna I gotta be very careful how many texts I send to you every month. Use Sprint mobile holder. Sprint was like the competitor back in the day, I feel like. Oh, that's a good fun fact. Thank you, Anna Marie. American Telephone and Telegraph is I didn't know that.
I didn't know that either.
That's a very good one. And great with the flow of the show, Anna Marie. We were probably going to end up Googling that in the next 5 minutes. Yeah. All right. I think AT&T is bigger for the younger generation. Would you guys agree with that? Ben, I feel like Thomas is on AT&T, but I get this and T-Mobile mixed up a lot now, truthfully. A lot of T's going on.
Yeah. I'll tell you what, T-Mobile has the best marketing in the game right now.
They've been hot for a bit. Yeah. Any experience with this stock, Mark? We can pull up a chart and take a look here in a minute, but what do you got?
AT&T is an interesting stock. It's obviously been around. The fact that they're referencing telegraph in their name, and it's one of those blue chip bellwethers, pretty consistent dividend payer. But I'd say for the majority of my trading career, this thing was just in the gutters, right? Basically from 2012 to 2024, it was straight down, and it barely has reclaimed the highs that it had of the great financial crisis. So, for a long, long time, this thing has just been a drag of a stock. It's been paying dividends, but, depending on where you were getting into the strategy, whether you were overwriting or whatnot, it was hard to keep up with the equity value. But that's totally changed in the last 12, 14, 16 months. We've seen quite a rip here. I don't know exactly what that's been attributed to, but something woke up in the last year here.
You're not
kidding. No, it's a great point. Yeah, I'm also not sure what has happened, but I'm personally a fan of AT&T for the dividends. I remember looking at AT&T many, many years ago. There must have been a split at some point. I think maybe not. Maybe I'm confused. Maybe I'm confusing it with a different ticker because I could have sworn AT&T was sub $10, but I'm not seeing it there. I'm probably confusing it with a different ticker. But yeah, take a look at this last year. Nothing but up, and you're collecting a nice 28 cents every quarter per share.
No, you're right. In April 2022, there was a 53 for 40 split.
Okay.
I was going to say my chart looks different. Again, I hate to say it, but Ben, I saw it under $10, right around $10 back in, this was 2011 we're talking, but
yeah, we'll have to figure out your settings though and what you've got going on, but
that's right. This was when they spun off Warner Brothers Discovery.
Okay.
Yeah. So I remember the stock looking real juicy at that point, just to buy and hold and collect dividends forever. Didn't do it, but whoever did do it, you've been collecting a nice dividend every quarter. And now price is heading back up. So if you bought back in 2019, 2020, well, and you held, you're back to break even. but you've got your dividends along the way. So what are those dividends annualized, like 5%?
I don't know if it's quite that high.
4.1
closer to 3.5% or 4%.
4.1.
Okay.
I mean, in some of those lows, I easily believe you saw annualization in the 5+% range, though.
Yeah, that's probably right.
So stock has doubled its value in the last 2 years, from $12 up to 26, 27 now. So okay, I wonder if this is on the trend spread watch list. I think it normally is, Ben. Honestly,
Sometimes it is. Sometimes the premium payout is too low to make its way onto the watch list.
Yeah.
This is the most recent dividend. The X date was on July 10th, so just missed it. Dividend to be paid out on August 1st. And it looks like
They're actually reporting earnings, I think, this week on the 23rd.
Wednesday, the 23rd.
Yeah, because it's on the trend spread watch list. It's a neutral trending. The 3-month EMA is picking up on the neutral trend. So it would be selling a condor between 25.50 and 28.50 is what we'd be doing to collect about $50 in I'm sorry. Yeah, $50 in premium, something like that.
Doug, I want to know, were you selling calls that entire time that you held AT&T? Because you could have got double dividend. You were selling quarterly calls.
I need to take back my premium. It's not.
This is a pretty popular overwriting stock. I get a lot of chatter about this as an overwrite. You know, you mentioned the vol level and the premiums not being crazy. They're not, right? They're barely better than, barely more vol than SPY. It's something like, call it 17 to 20 in average times. Earnings, you maybe get a 30 implied vol. But the premiums aren't crazy. But that said, for the most part, it hasn't really moved that much. It's just been this recent kind of vertical leg.
Well, what do you do? What do we do with this? I mean, geez, I wonder what the analysts say, and you've got to say we're pretty bullish on this, huh?
Yeah, I mean, let's take a look at the short term, because if we were trading this on trend spread, I would want to be bearish right now. I think
it's all over the place, man. They got some. This is daily bars we're looking at.
Yeah, we're looking at daily bars currently.
A lot of movement now. I mean,
we could take a look at the technicals. So technical analysis says 1 week, neutral-ish, 1 month. Buy. Analysts are saying
they're split. Well, at least the chart is split. It's more so of a buy than anything else. I shouldn't say they're split.
Yeah, I mean, you don't like to see some analysts thinking we're going to drop 20% and others saying we're going to pop 20%.
Yeah. Most are saying strong buy, 10 are saying hold. Again, of the 29 analysts, whoever that may be, whoever you are.
You know, most of the chatter I'm reading about some of the developments over the last year are very boring, relating to good business use, expanding into fiber. That Warner Brothers spinoff we mentioned with the split, like, you know, represents a focus on their core business, yada yada, continued sales and earnings growth. Like, so just a company being a good company and nothing particularly crazy, but obviously, you know, shareholders are rewarding that, and there's probably a little bit of a tailwind due to the whole like tariff tantrum over the last year, that this is kind of a value play as a domestic, you know, organization is, you know, seen as a bit of a safe haven in these markets.
Yeah, I don't think they're going anywhere. Regardless, who knows with the stock here, but I don't think the business is going anywhere. Do they own a stadium? They have to own a stadium or an arena or multiple. I'm trying to think if there's any big ones named after them. But I do have of course, a question that I ask on every one of these. Do we have any guesses on an IPO date?
IPO date. Oh man.
Like 1789.
Yeah, when was the first IPO? Because it was no, I'm gonna say that they were probably privately held and then IPO'd, and I'm gonna call it the 50s. I'm going 50s.
I like that 50s range for these like ancient stocks that just decide to IPO. Like, I think that's a fair bet.
So you guys are going to be thrown off here a little bit. It's July 19th, 1984. They go public. And this is, I'm looking, all right, I got dividend.com. I'm all seeing 1983, 1984. And then even on their own site, America Online became publicly traded in 1992.
Is that because that's when I don't know my history that well with the telecoms, but there was a big breakup of the telecoms. So I think, yeah, like what Doug's saying, near that time they got broken up. So like I suspect that when Mama Bell got broken into the Baby Bells, that's when they're marking the AT&T IPO. We represented them being publicly listed. I don't know if they were listed publicly prior.
Gotcha. Okay. Understood. That makes sense. But yeah, definitely later than we were anticipating there, at least based on the high level search and answer. Okay.
Yeah, the Bell System divestiture is the formal name for that, and occurred January 1984, where everything got split up.
Yep, divestiture. Okay, so it was a monopoly. Yep, got it. Okay.
A lot of spin-offs from there. When I was at PwC, I was auditing Avaya, which was a spin-off of one of the spin-offs of AT&T.
There's quite a ripple effect there.
Yeah.
Okay. Well, geez, yeah, I said earlier, it was on the trend spread watch list. It is reporting earnings this week. It's still only paying $10 in premium. It just snuck on the watch list, even with the earnings report. So that does tell me that it's probably not often on the watch list anymore.
What's the play here? What's the play then? If we've got a stock that has been ripping the last year, we're up 100% in the last year, paying out about 28 cents a share in dividends every quarter, and it's not paying a lot of premium.
I don't disagree with the trend spread's trend of neutral. Like if we're talking the last, let's go back to, I guess, March, we've stayed pretty much with some exceptions between $25 and $28, $29. Like I don't hate trying to stay within those prices. I'd be curious to know, Ben, if you're building a trade in Tradier right now, what an iron condor would look like maybe for a week or a few weeks out between, like, I don't know how wide the strikes are.
I'm assuming in order to get any sort of payout that's worth it, you're going to want to have a pretty tight body on the condor.
Yeah, we're going to
if we were to trade a condor, again, probably have tight wings as well, just to manage overall risk. I can't imagine you're going to earn much premium if you go beyond 50 cents from where we're at right now.
One out.
Pre-market, we're up about 50 cents pre-market. So maybe when the market opens, it's going to look more like sell the $28 strike and buy the sell the $27 strike. So $28 calls, $27 puts, and then probably buy the strikes 50 cents further out. That's probably the play if you're going to play this week.
So we're going to sell at 28. Let's say we buy 29, call. And I was going to say try to get around like this 26.50 price. Yeah, that's pretty much at the money. So if I went 26 and 25, let's see if there's any juice in this. If we just fill everything out for one. So if we wanted to, this isn't terrible. So if we do $1 spreads on the call side, all right, here, let me share my screen quickly.
Yep.
So Ben, maybe on your side, you can map this out for me quick. I'm going to pull this up on screen. Let me know what you guys think about this. So we've got the 28 sold call and $1 up from there, and then the 26 sold put for 34 cents. And here's what that was. So 28 and 26. So we'd be here and here. I don't hate that. Right now we're kind of in the middle of the highway. Pre-market, we're up a good bit, I guess it seems. So I don't know. There's a little bit of juice there. Even if we wanted to expand it a little bit, like say I doubt if we get all the way to 29, that'll do anything, but let's just try something here. If I went up 50 cents, now we're talking 28 bucks. All right, there's something there. All I'm saying, if we had to form a trade idea, not financial advice, I would do something maybe like this. For that's not terrible right here. Here's my daily bars in between 26 and 28.5. Don't hate it. 30 bucks. Don't hate it. Anyway, but they are actually. I'm just kidding. I hate it. They're reporting earnings. Let's cut this. Next segment. I hate this trade. Let's get this out of my engine there. All right. Any other thoughts on AT&T though? Truthfully.
No.
Okay.
I think we've covered it.
I'll never be a customer, AT&T, if you're listening. And it's nothing against you. It's just I'm set in my ways. Can't teach an old dog new tricks. Not that Verizon's been necessarily good to me. Verizon, if you're listening. All right. What do we got? Let's get educated. Let's go to the bot shop.
We've got the bot shop. Here. So, yes, Dillon's now shifted down to the bottom.
Quiet now.
So this is our last week covering the King Condor strategy. We will decide what we're going to do next week if we shift into the next bot, if we go on with an entirely different segment. Any feedback on how these sessions have been would be great. We will likely get one of our video editors to chop up all of these King Condor episodes, put it all into one long video. That way, all the details for the King Condor are available to you for your education. So today, again, the final show for the King Condor strategy, which has transparently been struggling a little bit this month. And not every month is going to be a winning month. We had a great May. We had an okay June, struggling in July a little bit, but we still got this week and part of next week to make up some of that growth. By the way, I'm getting an echo thing from you, Dillon.
I was on mute. Couldn't have been me. Could not have
Really?
been me. I was on mute. Oh yeah.
I don't think you were on mute.
I was actually. I was talking and I realized I was on mute because I was saying we're actually in a position now for King Condor.
Maybe Mark is the culprit, but we'll get over it.
I don't want to point fingers virtually. I don't want to point any virtual fingers.
So today we will be talking about trailing stop. We covered everything from time of day of entry to regular stop losses to the VIX to the width of the spread, so on and so forth. All of these different topics. Today we are going to cover trailing stops. And again, this is our base back test here. This is what it looks like. Now we will compare what this back test looks like to other back tests if we modify, in today's case, the trailing stop. So Mark, I'm going to kick it over to you to just give a little bit of education on the trailing stop and specifically the trailing stop for the King Condor. We've got a moderate trail on the King Condor. That's what's currently built in. We did run back tests for a tight trail and no trail. But maybe Mark, in general, you can talk through what a tight trail will do versus a moderate trail versus no trail at all. So I'll shut up now.
Yeah, so I think to take a step back and think about the stop loss overall, I definitely say this is one of the more important points of the strategy. Obviously we have the filtering and the signals and indicators for when we want to get into a trade. But once you're in the trade, that risk management that takes place there is incredibly important. And part of the reason it's so important with this specific trade is because of the way we're capturing that opportunity by setting a wider strike than our stop loss. we're actually capturing more premium than the strike widths would typically allow on a tighter trade that has the stop loss built into the structure. So having a stop in general is a really valuable component that allows us to capture that bigger premium, but also have relatively tight risk management on the trade. The trailing stop, 101, what a trailing stop does is it's going to adjust based on where your profitability moves. So if you have a simple stop loss, you basically mark your trade at the time of entry and say, I sold this for $1. I don't want to lose more than $1.50 on this trade, say. Anytime the price of that spread is greater than $2.50, boom, get me out. The benefit of a trailing stop is it adjusts based on where, if your trade goes in the money. So it allows you to kind of hold on to some of that, some of those gains that you've captured and adjust your stop loss there. So if that trade that you sold at $1 credit now moves to a 50-cent credit, you're up 50 cents. But instead of stop lossing at $2.50, you'd actually stop loss at $2 there. So by updating that stop loss, you're generally locking in, or not necessarily locking in, but updating your worst case scenario based on eventual profitability. So the way you want to set that trailing stop is similar to a lot of these parameters, finding that Goldilocks balance between capturing opportunity and staying exposed, but also having a sensitive trigger to getting out. If you have too tight of a trail, then you're going to see those scenarios where it'll move slightly in your favor and then against you, and you immediately stop out of the trade and lock in a loss. Whereas that trade might have wiggled into profitability eventually. On the flip side of things, if you have a really long trailing stop, you're not really going to get the benefits of that stop loss at all. At the extreme, you think about the very large $10 trailing stop. Essentially, you're just leaning on the strikes and the condor in this place. So having that trailing stop really is balancing staying into the market, keeping on that trade, capturing that opportunity with preventing the risk exposure that can come from having too loose of a stop. So Doug had a question here that I got distracted looking at, but I think is a good one. And he says, are you doing the stop on the whole condor or one on each side? So Ben, I will kick this over to you so I don't say something completely incorrect, but yeah.
Ben, let me give this a try.
All right, Dillon, go for it.
All right. So it's a great question by Doug. Ben, shut me up any second. Great question by Doug. Are we doing the stop loss on each side or the condor collectively? Each side is managed separately, correct, Ben?
Yes.
Good start here. Okay. So yeah, both are managed separately, and I don't know if we've given away where we settled, so I won't do that yet, but managed separately.
Managed separately, and they each have a different trailing tail. So there's different lengths on that.
Yep. All right, that was more dramatic. I just felt like I needed to pitch in.
I think there are a lot of benefits, in a lot of my kind of condors that I work on and study, like having the two legs being able to operate independently is very valuable. It's important to have context about like where your whole position is, and it can get wonky if you have across months or whatever, or expirations, I should say. But, generally having different triggers on call sides and put sides, I think is really important because there are different dynamics for the way the market moves to the upside and downside, and ultimately different, credits and structures that you're getting on each leg. So I think that's a really important nuance for a strategy like this.
Mm-hmm. Yeah, I agree. I really like the, you get in one shot, you get into the whole condor, but then each side is managed independently. And we saw that over the last couple of weeks too, with some of the other back tests that we've run. Mark, what's the risk of not having a trailing stop?
Very similar to the risks of not having a stop at all. Obviously with a defined risk spread, you have that ultimate stop that's defined by, your strike width. But kind of the nuance between a trailing versus an absolute stop is that the trailing allows you to capture or reflect, I should say, some of that profitability to the extent that the trade does move for you before stopping out. So it adjusts to the way the market is moving over the course of your or over the trade life cycle.
Awesome. And we'll see what how that affects the overall back test. And it was interesting to see the no trail versus the tight trail and what the differences are. So Mark, unless you have any final thoughts on trailing stops, let's head over to take a look at the data. All good.
All good.
All right. So again, we have a moderate trail. So between $3 and $4 for each side, the call credit spread and the put credit spread of the King Condor. These are the base numbers. So the numbers you want to remember are P&L 25.6, compound annual growth rate CAGR 53.3, and then max drawdown of 6.7. Now, when we look at this trade with a tight trail, so I chose $1.50 per each side to run this back test. Dramatically different, very, very different. The P&L drops all the way down to 8,000. The CAGR drops down to 22% from 53, and then the drawdown increases from 6.7 to 12.6. The curve is not that bad. I mean, it's not the best looking curve, especially if we can shape this data however we want when we're back testing, but it's not great. Like there's definitely some time periods where you're making a ton of money, then you're flat for a while, making some money, flat for a while, and then it looks like if you were to run with tight stops, these past couple of months would have done some damage to your account. So the tight trail, as we can see in this particular case, could be detrimental to the overall strategy. You need to give a little bit of room to breathe, right? You need to give a little bit of room to be wrong, but still win the trade. Again, that's one of the reasons we love option selling, is because we could be wrong on our assumptions on movement and still win that trade. Now, when we compare it to no trail, the numbers are pretty similar. And all I did for this was there were the absolute stop losses. There, of course, there are the spreads, but there was a regular old stop loss built in, which starts to trail after a certain point. So what I did for this test was I just said, instead of starting to trail, we're just going to keep that stop loss where it is, and we're not going to trail. And we're still seeing some pretty good numbers here. So overall P&L 24,000, CAGR just dropped by 2%, drawdown increased by almost 3%. But overall, that curve looks relatively the same.
Well, does that speak to how often this actually happens in this market that we're in now? You know,
well, it speaks to how often the trail actually kicks in.
That's what I'm saying. Yeah.
Yeah.
Not as I haven't seen it happen all that often as of late. Maybe I'm wrong, but I don't think we've had one relatively recently.
Yeah. I think it kicks in more than we realize.
True.
But the actual dollar effect is fairly minimal, as we can see.
Yep.
And I'd say also on the instances of no trail, I bet there are some instances where a trade will have won because there was more buffer, and if the stock goes against us, if the price goes against us, than if there were to be a trailing stop, because that trailing stop makes our range that we can be in tighter. So, and you can actually see the difference in win percentage here. I think that this proves that theory to be true. So on the base, on our current version, 77.7 per leg. And then on the no trail, it's 79% per leg. So, yeah, it's dollars here and there. You just got to decide what curve you like better.
That's right.
And for us, it was the moderate trail. So it was that $3 to $4 trailing stop that we liked to have to get the curve that you see on screen and these types of results. And all of this information can be found on our website at peakbot.com/strategies. You can read about the King Condor. You can see the back-tested and live results for King Condor. We do keep a calendar on the live results. You can see how we're doing in July. Currently a red month, but hoping to bring in some strong wins over the next couple of days here and turn July green. Would be ideal.
And it speaks to the importance of diversifying, right? Our other next generation bots are doing well. Shorbo up 3% this month. BenBot up 1.5. So that makes up for the drawdown pretty much of King Condor here in July. So important. Head on over to our website, check them out. And all the information and results are there for you, as Ben mentioned. What else, gentlemen?
That's about it from the King Condor stocks in real life perspective. We could go over the economic calendar real quick for the week.
Yeah, anything going on here? By the way, I was messing with that AT&T trade.
Yeah.
I moved it out to like 25, 5, and 29. It's still paying like almost $20 in premium. We haven't seen those prices in 4 months. So now it got me thinking. But anyway, what do we got this week?
Well, I'll see what it looks like when the market opens. So nothing really going on today. Actually, an eerily quiet day, which I'll check financial juice in just a minute. Tomorrow, we have Powell speaking in the morning. I don't know if this has been planned or not. I did notice it last week. It popped up on this TradingView calendar. I don't know if there's anything out online right now talking about what he could be speaking about. I'm wondering if this has to do with a possible resignation. We'll see. I don't know. But that could shake markets. And as a result, the King Condor will not be trading today into tomorrow because this is happening pre-market. And we don't want to mess with that.
No.
Moving on until later the day, not much of note. Going into Wednesday, not much of note in the morning. In the afternoon, we've got a 20-year bond auction, which means Max's 0DT orb strategy will be off. And Shorbo will be off. It follows the same schedule.
Yep.
On Thursday, we got S&P Global data, not a huge deal. And then nothing else really the rest of the day. And then Friday, durable goods pre-market, but then nothing. So pretty quiet week overall, other than the Powell speech tomorrow morning, in my opinion. That's just something to keep in mind. And if you can't keep it in mind, well, our bots keep it in mind, and they will not be trading for you as a result of that. I'm just going to go over to financial juice right now, see if we have anything else of note going on today. So today is the 21st. Yeah, all that stuff isn't even on. Let me refresh this. Yeah, okay, now it's good. Verizon earnings call at 8:30. We missed that, but that was on the list here. Yeah, nothing much going on today.
Well, then that's that.
Yeah.
Check
Roll call to see President Trump's schedule. He's getting lunch with JD today. That's about it. That's his day.
I hope they got something good on the menu for him. Of course, can't go without mentioning, if you are interested in getting into automated investing, but you're not necessarily interested in driving the bus because you need a little bit more help, you head on over to Mark Phillips and Harvested Financial. Get on over there, peakbot.com/harvested. He is a registered investment advisor able to manage your portfolio for you for as little as accounts as small as $10,000. Okay. So head on over, peakbot.com/harvested. Everything we've talked about on all of these shows. We want to educate you as much as you can, but we know the reality is that not a lot of people have the time to dedicate to trading in the market and being wise about it. That's why Mark's here. So utilizing PeakBot's custom strategies to manage your portfolio. And then on top of that, all of his other, know-how managing client portfolios. Don't ask me about it.
Mark's a smart guy.
Mark's a very smart guy. So head on over to peakbot.com/harvested and get signed up and schedule some time with Mark himself. So, Mark, anything else from your end, my friend?
Nope. Keep Common Condor on.
Yes, we're in one right now. I'm not going to talk too much about it because I don't want to. Okay, let's get out of here. Thank you so much. We will be live again Friday at just shy of noon Eastern. Tune on in for the automation station. Other than that, thank you so much. And as always, we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.